Boom! How's it going? How's it going? Yeah, we are live again. And today it is Monday. And generally on a Monday like this one, we are out and about. And we are talking anything and everything around real estate. And I've got my fund manager, Joe. Joe, how's it going?
Hi, TJ. Very well, thank you. From a cold Potchefstroom, eh? But otherwise, not too bad, eh?
What's the degrees there, man?
Yes, like today it was like 15. I think it might have dropped down to, I think it might be around 6 or 7 right now. And
Yeah.
so yeah, it's quite cold, but yeah, we're hanging in there.
That's the only thing that you can do in times like these ones, to hang in there. So, ladies and gentlemen, wherever you're watching us, good morning to you. I am trusting that you're doing well, and wherever you're watching us, you can be able to watch us. Your sound is good, and you can hear us. As it is on a Monday, we come out, Joy and I, we come out and we talk about property investments. We talk about things that we are doing physically here in South Africa, and this is in general talking about property investments. There's many people that are doing this, but some of them literally don't know what they're doing. But I will not talk about that because we don't want to mention people's names. But also, what I would like us to say is that when you are investing in property, there's lots of things that can go wrong. And this past Saturday, we did a show and tell. Joy and I, we were at a show and tell. Joy is slowly becoming my virtual partner. All the time I'm with Joe. So
Yeah.
yeah, and here's the thing: there was a couple of things that went wrong on the project, and I'm talking about some of the things that we discovered as we're doing due diligence, and
Mm.
some of the things that was then fixed when we moved in. And Joe, today I just wanted us to unpack the reality of what can go wrong on a property, because I think people have this facade or thinking that when you're buying property, whoo, there is money in it, and they actually don't know that over and above the work, over and above the money that is there. Don't get me wrong, the money is there, but over and above that, there is work that needs to get done in the background. And for a lot of people, I think this is an opportunity where you can actually invest without ever doing the work yourself as an individual. Joe, welcome. Good evening to you. But you know me, it's always good morning. So good morning to you.
Hi, TJ. Yeah, it's going well, thanks.
All right, all right. So let's jump into this project here that we spoke about on Saturday. This is one of the latest projects with the fund, and this project, it's something that me and you we're very close to, and it's going to be rolled out. But let's just quickly talk about what I don't want to say what went wrong, but what were some of the other discoveries that people don't generally don't know about if they are investing in funds and things like that. They just think that it's all smooth sailing. Anything that you can kind of like tell us that has happened on this project?
Well, specifically to do with the property, there's quite a few things that we needed to take in consideration. It doesn't really just start within the property; it starts from the outside walking in. So you need to consider the security of the area. You need to consider what type of area it is, what type of buildings is in the area. You need to consider is there culverts or stormwater drainage close to the house? Is the house located in a low point? Then you need to move inside the house and see, well, how many bathrooms is there? Is it possible to accommodate so many people? Because obviously you only make good money if you can put a lot more students in there. But still, the services of the property needs to be in such a state that it can accommodate those students. So you really need to be like investigator and look into the property and investigate, the sewage lines, stormwater drainage,
Mm.
after some heavy rains, where has water accumulated? It's a lot more things that goes into that really people don't always see. So that's
Mm.
what we take into consideration.
I actually want to talk about the security aspects because the security aspect of the property that you have, I mean, the security aspect of you that you have on a property. I mean, if we are to really look into it, and you've got, I think, valuable, it's wrong for me to call people assets, but you got valuable assets. You got valuable people staying on your premises. Some of these are girls, and some of the fathers are thinking, my child is going to varsity, and this is my lobola, and I am not going to go to. This is my pension money. There are fathers out there that think like that. Say, I'm sending my girl child to school, and this is going to be part of my pension, and you don't put on security. I mean, we speak of it in a joking manner, but the reality is that you still have human beings on a property, and these human beings needs to feel safe because number one, they are younger. Number two, they are vulnerable. So security really plays a big role. What kind of security do you put into a place of a student accommodation to ensure that the returns that you are getting are good returns? You are the fund manager. You make sure that whatever that what we are buying from an acquisition perspective, the returns of it are good, but you're also not compromising on things like security.
Yeah, absolutely, TJ. So again, it starts from the outside going inwards, and we've got camera systems up the street and down the street. This so there's cameras that's controlling the area, the movement in the area. So we would like to say that brings a lot of safety or security to the area already. Then
Right.
a good thing is automated gate that opens with a special code. Not everybody's got that code. That code gets changed on a regular basis. Something else is that we put new locks in. And main doors, we replace locks every year. It's not a big expense, but next year if the next student comes and lives in the same unit, it won't be the same key that fits in the hole. So the current student can stay there and he can feel secure because he's got the only person who's got the key for the lock. So we do things like that. And then we do have third-party insurance, which is very important if anything should happen to the students, while they're staying in our premises. So we're looking after security and we're looking after insurance to make sure that our students are well looked after.
Yeah. What about the infrastructure of a property? Whenever you're buying a property, it almost sounds like you gotta have a renovation from time to time. And I'm always thinking that, do you really need to have the renovations? But the one thing that I've also learned is that if we look into the majority of our universities or our student campuses, and these particular places where they are places of learning institutions, in general, they are in and around a neighborhood. So you're not going to find big buildings that are built around it, to accommodate big numbers of students. But there you are, you're always either buying a big stand or a big house, and you need to do some renovations. When you're doing renovations, this is part of the money. People that are investing in the fund, some of their money goes through into security. Some of their money goes through into renovations. What are you renovating?
Yeah, so obviously, any investment, we need to take it where it is and we need to elevate it to the level that we want it to be at. And that takes money and funds to do it. So, we like to add value to properties. So we like to get into a property that's got some optimization potential. And then we'll use the funds from our investors to renovate the properties, add additional rooms, build additional bathrooms should it be required, to get more students in the houses and the properties and up the investment return for our investors. So generally it goes towards additional rooms, bathrooms, maybe, some upgrades to the kitchen, Definitely some appliances, because more students equals more appliances. So those are generally the things where we spend the money on. Security, also, separate power boxes for students to control their own power. Those are the main things that we focus on.
Yeah. Okay. And having said that, Joe, in some cases, you can still hear me nice and clear, Joe?
Yes, I can hear you nice and clear.
Right. So in some cases, you have all of this money coming in, and who are the typical people that we can easily say they could or benefit from investing in a fund like ours, which is a Section 12J?
Yeah, so the nice thing about our fund is that anybody that wants to build up assets, and build stable, sustainable income can invest in our fund. So it's a fund based on property, so it's got an underlying or underpin asset, as I would call it, which is very important.
Yeah.
Because if you were to invest in anything else, if you were to invest in some other industries, you do not have the underlying asset, that actually stands for the security of your money. If anything goes wrong, you still have the property. And not a lot of businesses can say that. So when somebody invests in one of our funds, they obviously become one of the shareholders in the property. So they own a portion of the property, or depending how much they invest, they could end up owning the entire property with the investment monies. So that's actually how we set it up, and that's what someone can expect when they invest in a property.
Right. And that's quite good because you're getting ownership of part of the fund, right? Is that correct?
Yeah, you're actually getting ownership, and you're getting a consistent income, and we're looking to pay out a monthly income to investors, and that's all based on the rental income we get from the properties. So it's an easy business model. We use your investment monies to buy the properties. We rent out the properties. We collect the rent for you, and we pay you the rental income in dividends. So that's our model, and we'd like to keep it simple and easy.
That sounds very easy, Joe. And for people that you are watching us, I wanted to say that if you're watching from home or wherever you are watching us from, if there is any questions, you can ask me that question now in the comments there, and Joe and I will be able to respond to you. But I also want to stress the fact that Joe has just said this is a very easy model. But not a lot of people can do this. I mean, if it was easy, everyone would be doing it, right? Sometimes just breathing alone becomes very difficult for some people, right? And I want to ask you the question before I go on to the comments, Joe. If one is to invest, what is the minimum investment that you guys take?
Yeah, so TJ, normally a fund like ours started at R1 million, and what we've done, what we've done with our investors is, with some paperwork that we put in place, and we actually brought that down to 50,000 rand. So currently we're accepting 50,000 rand up to 2.5 million, but to get your portion of a property, it's only 50,000. To be in a game and receive your dividends. So that's what we're going to pay our investors.
Okay, all right. And having said that, then so minimum of 50,000, anyone can invest. That's number one. But this thing is also coming to an end, right? The Section 12J, it's on a sunset. It just basically means that it's coming to an end. When is it coming to an end, and what's the effect on our side?
Yeah, TJ, again, that's everybody in the industry currently knows that this tax initiative, which is put in place by government, is coming to an end at the end of this month. So what does that mean for a normal person is that you can still make an investment and reap the benefits for the next financial year or the next year in your taxes back if you put your money down this month and you sign your application and mandate form for us to continue with the paperwork. And then after that, we'll issue you with share certificates and with the tax certificate that you'll need to do your ERP5s. So those are very important, but it does not mean that the fund will come to an end. It only means that the opportunity is in the next month or this month only, to get your foot in the door and become part of the fund, so you can have the benefits over the next 5 years. And after 5 years, you can have the opportunity to stay in the fund or exit the fund and take your capital and move on and invest in other ventures that we might show our investors at that stage.
Okay. So for some of you who are at home and you're trying to figure out how best can you be part of this, there's the link there. In the comments, you'll see the link that says Join M5 Fund. That's how you can join in. But I just also want to go into some of the comments. The comments, Joe, that are coming through. Mongezi says here, can I use the bank's money to invest in the fund? That's a very straightforward question there. Mongezi is asking, maybe he's got a personal loan that he wants to get or a home loan that he wants to get. But there's many products at the bank, right, that he can get in. The question here is, can he use the bank's money to invest the fund? Obviously, you're not giving any advice here. But if it were you here, knowing what you know within the fund, can you use the bank's money?
Yeah. So, TJ, to answer that question, you can use money from any commercial lending bank out there. Obviously, you can use your own funds, or it could be funds that you've got on a loan. Obviously, you need to take into consideration what our fund pays out and what's going to be your interest on the loan that you take out, because you do not want to be in a position where you pay money in if it doesn't give you a reward. So what we're offering our investors is the reason why it could be a good option to take money and invest it from the banks into our fund is if you've got a large tax burden that you've paid taxes for, and you anticipate that tax rebate to come in. So if that's the case, you're in a very good position, because you can use that tax rebate to pay off almost half your monies that you lend from the banks to do that. So it is possible to do it. You need to apply yourself and just make sure your numbers work out. But you can use funds from underneath your mattress if you really want to. It can be from anywhere.
I just want to put it more into everyday language here, Joe. You say that if you've got a tax burden, and I'm just thinking, what's a tax burden? Let's try to explain it a little bit further on that one. What do you mean by tax burden there, man?
Man, so we all pay taxes in the country, and so this specific opportunity.
We're all supposed to.
True, very true. So and so this opportunity we're giving our investors is really a sweet opportunity, in the sense that we not only grow your funds, but we also give you the opportunity to get your tax rebates back. So normally you would invest in any other fund out there, and they'll give you a good return. So what we are doing is we're giving a good return, but we're also, because we're registered as a Section 12J company, we've got the opportunity to give you a tax certificate that you'll utilize to use and in claiming back your tax rebates from SARS. So that means on the one side, you've got investment that grows quite significantly, and on the other side, you've got a tax rebate. And if you were to be at a higher tax bracket, so we do not all know at which tax brackets we are in, but it's if you consider it on your payslip and you have a look at that, the amount of money that SARS deducts from your current payslip, and it's a high amount, it's assumed that you're in a higher tax bracket. There's ways to work it out, but we wouldn't really get into that technical side of it right now. But if it's a high number, then you obviously know that you're in a higher tax bracket, and then the taxes that have been paid over to SARS in the year can actually be rebated back to you because you've invested in our fund. And by doing so, the money that you've loaned from the banks or any other institution to buy the shares could actually be paid off with the tax rebate that gets paid to you by SARS. And that's really a nice position to be in, because you've paid for your shares with tax monies.
What you are saying, Joe, if someone is to invest R1 million and they don't even have R1 million, and they have a tax burden, I'm going to use that terminology of yours, tax burden. Makes me feel intelligent a little bit, tax burden. Hey, what's your tax burden? So in reality here, they need to be on a higher tax bracket, right? And that tax bracket could be, let's say, 45%. If I'm to explain it with a person who is now going to invest R1 million, technically they don't need to have the 450,000, because that 450,000 is equivalent to the 45%, which SARS was supposed to give them. Which SARS is going to give them as a tax rebate. Refund. A lot of people, someone corrected me, says, TJ, why are you calling it a rebate? Is it not a tax refund? I said, okay, let's call it tax refund. So tax refund, right? Of 450. So that's money that could have been taken away from you out of your pocket, but this time around, SARS is actually giving it to you. So you got that benefit, and that's money that you'd have never seen in your life. That's money that would have gone to the government. But the government designed this actually and said, we can give it back to the people. And it's got nothing to do with the fund here, Joe, right?
No. Actually, the reason why government has done this or created this initiative is to create jobs for everyday persons on the street. And when we buy properties, there's a lot of people involved in managing the properties and doing the upkeep and the maintenance and the cleaning and being part of the security. So obviously the reason why government is doing this is because we're creating jobs, and those jobs, every single individual pays taxes when they receive their salaries. So government still gets their money at the end of the day, and our investors gets all the taxes back.
Awesome. Someone says there on Facebook and says, hi there, do you pay dividends on a yearly basis or on a monthly basis?
Yeah, so teacher, we're gonna pay dividends on a monthly basis, which is the rental incomes that we pay over to investors. So we opt to do that from next year, July onwards, to pay our investors on a monthly basis.
Awesome stuff. In the comments, ladies and gentlemen, there is a link that says Join M5 Fund. And within that link there, you can literally click on it. There is an application form in terms of how you can apply. At minimum, 50,000 Rand is what you can come in with and join the fund. And you get your shares, you get your tax certificate, and you are in the game in terms of owning properties. Obviously, you're going to get your tax rebate, tax refund that you're going to be getting. And out of that money is going to come through from SARS. It's got nothing to do with us. Your tax bracket is equivalent of what's going to come to you. And over and above that, the fund is going to be making some good money. And you are going to be getting a 7.5 annually interest on it. That is obviously the proceeds from the properties that are being rented out across South Africa. At the beginning of the show, we were talking, Joy and I, we were discussing a particular project, one of our recent projects, and we are already looking at another project. So I want to assure you that whether you're joining us or you're not joining us, we are proceeding. The train is happening. It's moving, right? And you want to join us, and not just you want to join us because we are M5 Property Addicts. There's an added benefit here where you can make some good money. Joe, I want to conclude the conversations that we are having. I know that I'm getting some money that's coming in, right? But I don't have cash all of it right now. I want to invest R1,000,000. I know that maybe I'm having around about 600,000 that's coming through. I'm selling a house. I work at the oil rig. I don't know, wherever the money is coming from. How can the fund help such a person after they have clicked on that link there that says join M5? How can the fund help them?
Yeah, TJ, this is very exciting for us because the opportunity is quite large for investors because normally any other fund you should have the capital available to invest. But what we've done is we've actually put a process in place that investor can come on board with a loan agreement, and we'll issue the shares to the value of the investment that you want it to be, even though you don't have the cash right now. So meaning that, let's say you want to do R1,000,000 investment, but you only have 500,000 rand, then obviously we'll do a loan agreement where we issue you with the R1,000,000 shares, and but you only have to put down 500,000 right now, and we can structure the rest of the payments, and those payments can come from your taxes that's being paid back to you by SARS, so you wouldn't be out of pocket to pay those monies over for your shares. Obviously, you'll still get your dividends based on your share value, which is the R1,000,000. So what we've done is we've done quite a few calculations to make sure that we can pay the dividends to our investors, we can buy the properties, and they can pay it off on a loan agreement with a small amount on a yearly basis until they've paid up all the shares. So yeah, that's what we're offering. So you don't have to have all the money right now. Obviously, it only starts from 500,000 rand upwards. So we can't give this to anything less than that, for the reason that we still need to buy properties to generate cash flow. And that's the reason it starts from 500,000 up to 2.5 million.
Okay. So, ladies and gentlemen, if you are one of those people who are saying, look, I want to jump in on the finance option, step number one, you need to click on the link there that I'm just showing on the screen. The link, you should be able to see it as well in the comments. That's step number one. Step number two, you need to have a deposit. You need to have a deposit. And that deposit is 250,000 Rand. Whatever amount that you want to be investing in. You want to invest 500,000, you want to invest R1,000,000, you want to invest the highest one, which is 2.5 million. At any given time, you need to have 250,000. Of your 250,000, the difference, Joe will then have the discussion with you in terms of how do you pay the difference. There's different stages in which you can be paying that off. The benefit that you have is, as explained by Joe, SARS, you can get a benefit from SARS, of which you were saying that if you are investing, let's say R1,000,000, basically 450 is going to come back from you from SARS, up to 450, because we're all on a different tax bracket. But this is really designed. I keep on telling people that the lower you are in the tax bracket, the less you know around making money in taxes, right? And I think Joy and I, we have made it, like ever since we met and we started talking to people, we have raised the bar in terms of awareness of what people can do to build their portfolios using taxes. A lot of people didn't know. A lot of people still calling us, our offices today. Joe, you are also talking to people every day. What are some of the questions that you're getting from people? Give us one or two questions that we can discuss right now that you're getting from people, which is a regular ask. Things that you and I were thinking that, nah, man, people should know this.
Well, teacher, something that is very important, and people should realize this, is that we don't stop buying properties. We continually buy properties. So even after we've received the investments from our investors now before end of June, and the next cycle starts again, we actually pull the equity out of our current properties and we buy more properties. So even though it says 7.5%, guys, it's not 7.5%. because we're buying additional properties the whole time. So the more properties we buy, the larger our portfolio, and your 7% becomes 7%, 7.5% of a larger total. And at the end of 5 years, all that equity that's unlocked through all the properties, it gets shared between all our shareholders. And that's quite a big number. That's something people don't take into consideration, you know. That's why when we advertise our growth for our fund, you know, it's 17% and upwards, 17% plus growth for our investors, you know.
Amazing stuff. Joe, I don't want to hold you back. I am sure maybe somewhere else you can be feeling a little bit warmer. So I suggest that we jump in a, I don't know, maybe a blankie or something, so that you can get a little bit cozy and warm. For now, I think I'm going to leave you. Let's jump in and talk about this again next week, Monday. Ladies and gentlemen, if there is anyone else that you think can benefit from this, next week, Monday, Joe and I will be here. You can ask the questions, we will answer them, but it's all about educating you on how you can make some passive income, utilizing your tax monies and investing in a Section 12J fund, registered by the FSB, registered by the SARS, and something that is legal to make sure that your investments are secured. So thanks a lot, Joe. Stay warm.
Thank you, everyone.